Okay, cool. Before we go into any charts, today let's focus more on some recaps, concepts, and the overall strategy that we're trying to use. All right. So I want you guys to pretend that, I'm a completely new student and I have no idea what I'm actually doing, and you guys tell me what I'm supposed to do. All right. So today let's start with Team B. Team B, we have Ross, Lila, Casey, Satyawan, and Dennis, right? All right. So, let's say, if I'm coming into the markets, what's the first thing I'm looking for? Let's start with Dennis. What's the first thing I'm looking for?
Traps.
Traps. Okay. All right, Satyawan. Traps, we look for them where? On which time frame?
1 hour, 60 minutes.
60 minutes, right? So, Team A, you guys can stop me later if we miss anything. Yeah. Okay, let's move on. Lila, how many types of traps do we usually have?
A, B, and C.
Okay. Casey, is that all? You're on mute.
Sorry. Yeah, a range break trap also.
Range. Okay. So Ross, once we have, let's say hypothetically, we have found a trap on the 60-minute, what's the third thing we usually would do?
Look at the 4 hour to see what the overall trend is going now. Whether that's step 3, I'm not too sure. Let's see which way
Markets are going.
is the potential trade in a counter trend or with the trend.
All right, good. So, that's important as well. Check trend and let's rotate back. So, Satyawan, how do we check the trend on the higher time frame? What are we actually looking for?
We are looking at the MA 20 and 50.
MA 20 or 50.
Yeah.
Okay, so still on you, Satyawan. What's the logic behind looking for 20 and 50? What are we worried of?
The trend is dying or something like that.
Yeah. What would that be? What would that something like that be? So let's say you have an uptrend, and then we see a trap on the 60-minute, and then let's say this is now the 240. We see the 240 touching the 20 MA. What are we afraid of?
Afraid of the counter trend. I mean, the trend is dying.
The downtrend is dying, you mean?
No, I mean the uptrend is dying.
Yep. So are we able to sell it?
Not yet.
But what are we trying to do here in this whole situation?
I think I would wait and
So in this case, the whole logic behind going up one time frame higher to check if we're touching the 20 or 50 MA is because we are worried that, let's say this is the 60, this kill, this trap, which is this one, all right? We want to sell this. But if we go on to the higher time frame, 240, and we see that it's slowing down and touching the 20 MA, it could mean that they want to try their buys because they are refreshing. Does that make sense?
Yes.
Yeah. So why are we looking for the 20 or 50 MA on the higher time frame? What are we afraid of?
We are afraid of it's just a pullback and continue the trend instead of selling.
Yep. We are worried that on the higher time frame, it's just a pullback,
Yes.
and then they want to continue the buys, right? Okay, good. I think you got the idea. So we're worried of refresh. We're scared of this, so we check the higher time frame. Okay, so once we have checked that, let's say we are with the trend, we're not really counter trending. There's no issue with the trend. Going back to the 60, what do we do? Dennis. Dennis not here. Is he not here? Yeah, I think he left. All right. Lila, what do we do next after these three stuff?
If we are not counter trending, then we prepare to sell from a release point.
Okay. So let's say prepare to look for a pullback, right?
Okay.
Okay, Casey.
We want to check our volumes on the overall trend and the last, I can't remember the word for it, but like the detailed on the lower time frame. Overall trend health, and then the last little push health also. On
the lower time frame?
Overall health, yes. Hang on, now you got me thinking. Overall health is yes on the lower time frame.
Okay. All right. So
overall health of like the last push.
Lower time frame volume. All right. So once we have lower time frame volume, we check for the overall and detail. All right. So, Ross, what's the whole idea behind checking the overall and detail volume? What are we trying to look for?
Trying to understand whether the trend is healthy or not. And so, if, for instance, is the volume increasing on the trend, which may indicate that health. So it may indicate that the trend up or down may be coming towards an end.
Yep. So we're just looking for how healthy the trend is, right?
Yep. And also that would be done on the 60 minutes.
Yep. It's very, very important, guys. I would say the checking volume part, we have to do it twice. Once on the lower time frame, once on the higher time frame. Higher time frame comes right here. All right, so there's one more step here. Okay, so volume analysis. I'll just call it volume analysis. You guys get the idea. All right. So yes, that's really good. And the same thing here, right, Ross? We're also checking how's the trend pullback and the trend coming in to resume the whatever trend we're trying to resume.
And where the levels of where there's accumulation of trades of volume, is that above you, below you?
Yeah.
So there's it's trend health, but also what impediments or what may assist you.
Yeah. So it's like the wall.
Yes.
Right.
Behind you or in front of you.
Yeah. Okay. So team A on the 60-minute time frame, or and the 240, let's say until before we go down to the lower time frame. As a beginner myself, let's say, is there anything else I need to make sure of before going down to the 5? Team A, any of you guys?
I think, yeah.
I wanted to say we'll check if we are near the traps on the 60. Near the trap on the 60. If the pullback is close to the trap of the 60.
Okay. So traps here. So mainly, I think you're trying to say you want to mark out where the release area is.
Yes.
All right. Okay. Someone else was speaking just now.
Yeah. It kind of relates to what Jan was saying. You basically want to figure out what story you're in to know how far the release can travel.
Okay. So, which one would that fall under the trap? 60-minute time frame. So the other thing is also, I'll just put 6 here. I think it's getting messy, but story. Okay. All right. Now let's go back to team B. In terms of the story, Laila, what kind of story might we be in?
It could be in the daily story, where it's just like we talked yesterday. It could be that it is doing the primary, and then maybe we could be in the secondary or something. So we have to be aware that we're not counter trending the daily, I guess.
Yeah.
The bigger.
Yeah, that would be. I think that would fall under checking the counter trend. But I guess you said the right things. So let's say if we're just on the 60, we also have to check: are we doing a primary, secondary, or what we call it on phase, launch phase?
Those on the 4 hours and the daily, right?
No, the 240 and the daily, they're just there for us to see if we are counter trending or not.
Okay.
Yeah. If we're not counter trending, we just trade whatever's on the 60. That's all. Okay. But let's say you could be in a story where the 60-minute trap is in the 240 story as well. So that would be like an eclipse.
Yeah.
We'll come back to that in a bit.
It's there where I go in deeper and deeper, then I let go of everything, because it takes time to go to the 40. Then you go, okay, this is, I don't feel it's right. So I go to the daily to check what's happening, and I get, yeah.
Yeah, I think that USD yen was a good example. We'll come back to that later.
Yeah, I think the Swiss yen is also doing the same thing.
Okay. Yeah, we'll go to that later.
Yeah.
All right. Casey, anything else on the 60-minute or higher time frame?
Just trying to think overall flow.
Overall flow should probably be the trend.
Yeah, yeah, nice and all that. And so kind of after the story, we could do, if we're going to another step, maybe start the read on the pullback on the lower time frame, or
Yep.
still lower time frame stuff.
Anyone else still think we missed anything on the 60-minute or higher time frame?
Distance, maybe?
Yeah, could be something. Yeah, that's important too. That's more like the more detailed part of the analysis, I guess. Well, space, right? Okay. Satyawan, can you think of anything else on the 60?
Nope.
No, right? I don't think so either. Yeah. Should be more or less like that. Okay. So that's all for the higher time frame, 60 and above. Okay. So lower time frame, we check overall and detailed volume to know the health of the trend that's pulling back. All right. So number 6, on the lower time frame, besides checking the volume, what's the other thing we have to check for, Satyawan?
Lower time frame.
This is this is like the pullback phase.
We're looking at the where to release.
Okay, before getting to, all right, so where to release, do you mean the 60-minute release zone?
Yeah.
All right.
Around that.
Release at 60. Okay, which is pretty much, where is it? This one here.
Yeah.
Okay. Okay, so let's say we're getting to the release, then what happened? What's the plan there, Ross?
We're looking for go started and whether we've got go started to recognize whether we've got traps. We're trying to look to where the releases are and who's in control, and yeah, looking for those traps that we can work from.
Okay, so looking for the guy who started to sort of be killed, and then once that kill happened, we have trap.
Yep.
All right. So, okay, is there anything else we have to make sure of, Casey?
Where the how do I put it in words? I guess the point where you would want to exit the last trap on the other part of the trend. I guess if you're trying to sell, you'd want to find out where the last sellers died on the bigger push down, if that makes sense.
Okay, so planning the exit part. Generally, this planning exit part, you'll be able to do it more efficiently, or at least with more confidence once we understand the story here. Okay, so planning exit. Okay. Laila, what else? Is that all?
Well, of course, volume behind you and in front of you
Yep.
to know that.
So that's here, right? Very important. Before planning exit, volume have to be behind.
Yeah.
Okay. So let's say if volume is in front, what do we do?
If I don't have enough volume behind me, bigger than the volume in front of me, then this wouldn't be a valid trade, I guess.
Okay. So let's say it's not too far away, the high volume in front of you at the release zone. Is there anything else you can?
If I'm gonna wait to get rid of that volume to transfer
Yep.
my side, then I
Yep.
can make the trade.
Transfer. Okay. All right. Ross, do you think there's anything else?
I'm battling to think of anything else.
Casey? Setiawan?
Correlation, maybe.
Yep, that's next part. Yeah, I suppose. Yes, correlation. What's something we generally maybe this is not like the most important thing. Maybe you guys should know this, but this is not really part of the setup. But we also have to make sure we are around market hours, right? Market hours generally will give us volume anyway.
So market hours is like how many hours in this market opens? 3 to 4 maybe?
Yeah, as long as you're not trading in the dead hours after New York lunchtime, then it's okay. And then Asia, London or New York. Well, obviously London and New York, they will have a little bit more volume, but Asia is fine too if there's news.
New York lunchtime? Okay.
Yeah.
Luckily it's midnight here.
Yeah.
Is it possible that when we have London and New York open at the same time, it's more movement? It would be New York open then?
Yeah. From right now, let's say anywhere from right now until from right now and 8 hours, this time, what's it called? Now until lunchtime, New York should be fine because Frankfurt is opening already, and then London is opening in half an hour.
Yeah, okay.
Yep. All right. Yeah, I guess that's it. So you guys want to have your own little checklist in the beginning, just to make sure you guys are always on the right path while taking the trade. Myself, I have my own checklist as well. It is exactly like this, all laid out for me, just to make sure that I'm pretty much always following my plan and my rules. So for now, let me just double check everything on my end. Yep, all good. Right. So these are the stuff, all right, that we always need to follow. I would say the most important thing in all this sequence is, well, they're all important. right? But this one is important. This one is really, really important. And this one. Okay. So we can see on the 60-minute, there's obviously a lot of steps we have to be concerned of, right? To be prepared for. And the same goes for the 5 minutes. But emphasis, the focus has to be a lot more on the 60. Because you guys have seen, remember like the dollar yen trade from the day before, even though we don't really have a kill, but we have volume behind, it can still work. Those are just a little bit more aggressive entries, more riskier entries. But as long as this story is okay, volume is behind you, then it's okay. Right? You have a better chance of having a winning trade. All right. All of this is our trend pullback edge, right? By following all of these steps, I'm not saying, you will be guaranteed a 90% win rate, but at least something higher than 65% and more than 1 hour most of the time. Okay, just a rough number that I see. Yeah, I think Eon, you raised your hand first. I'll get to you, Ross, in a bit. Eon.
What I want to say is, okay, we choose the pair based on this criteria we have here, but we should enter into the trade only if we have a good risk reward. We should see also the stop loss where to be and take profit, and then based on let's say minimum acceptable price, as Navin says. So about the minimum risk reward we want to have, we plan the entry. If we get that entry, it's okay. If not, the trade goes without us.
Yeah. So that's important. So that's more towards the trading side. So on the trading side, between entry, stops, and target, Eon, which one do you think you have to plan out first?
The stop loss.
Okay.
So we know the stop loss, then we should look on the take profit. And then based on the minimum risk reward, I think we should plan the entry, where the entry minimum price, as Navin says, should entry. Minimum risk reward, we have to accept 1 to 2, 1 to 1, or yeah. I don't know, 1 to 4.
Yep. So the easier way to do is look for your target first.
Okay.
Okay. Look for your target first, and then look for your stops, and then entry. And then from there, at least if it's more than 1 hour, then it's fine.
Okay. More than only 1 hour because the winning rate is good.
Yeah. I don't want to put too much emphasis on the win rate percentage, because think about it, this is all discretionary, right? There's no system involved. There's no, even the SNRs are vague, right? The traps are vague. This is all logic, right? I can explain this thing. I can understand all of this part very well, but looking at my my trades this week, as opposed to some of you guys' trade this week, you guys made more money than me, especially with USD yen yesterday, the day before, and then the other one, CAD Swiss, right? So, don't put too much emphasis on the win rate, because everyone understands this piece, but everyone trades it very, very differently. You see what I mean? So as long as
Yeah.
you get the story right, as long as it's more than 1 hour, just so you can cover the spreads and commission, then it's fine.
Okay.
Yeah.
Okay. Thank you.
Yep, no problem. Ross, so question.
On announcements, where does that figure in there?
Oh, yeah. News, you mean?
Yeah.
Yep. That would be important as well. Something to definitely watch out for. Obviously, we do not want to take a trade right when the news are being released. So that's as far as I would go with avoiding news. But most time, if the stops are wide enough at a logical spot, the news would generally push in the right direction. Yeah. So one thing I always see in Elite is once someone gets stopped out and then the trade just reverses the entire direction, students will start saying the trade was good, it's just that the news messed things up. So that's not really messing things up, because if the news released and then went all the way in the opposite direction, it just means somewhere inside this sequence something is wrong. The story doesn't make sense. Unless the news spikes up and then go in the right direction, then yeah, obviously the news messed with you. Otherwise, focus on the story a little bit more.
So it's only the entry you should avoid to take just before the news. Otherwise, if it is maybe an hour before or after, that's no problem, of course.
Yeah, no problem. Just try not taking, because we're trading on a 65, so try not taking any trade right
Right when the news comes, yeah.
Or 10 minutes before, that kind of thing.
Okay.
Yeah. More or less, or 5. Okay. Yep. So any questions so far? No? All good?
Can we just, this is more routines that you do. Okay, we do all that, but then you go and maybe you mark one purple, one green, one that, just to know how to focus for the day. Okay, first you find your setup and all that, and then some of them are good setups, but not for today, it's more for tomorrow. Just this routine of, okay, I'm gonna mark these green for today, purple for maybe 2 days or something, and I just go back to that this week. If we can get this routine also, if you know what I mean, because when I scan everything, I see a lot of setups maybe that could be ready in 1 and 2 days, and I don't want to let them go and forget about them just because I didn't find. Just because it's not a setup for today. I need to have it in my mind and not just forget about it. And that would be just to mark it somehow and go back to it later.
Yep. Yeah, I understand what you mean. Yeah, we'll cover that in a bit. Right after I check if everyone's good with this whole itch. All good, everyone?
Yeah.
Right. Okay. Yep. Before going into that, Laila, here's something we always need to also be concerned of. Besides those stuff that we all just wrote down, what do we do not want to see? what do we need? What do we do not want to see? On our setup. Casey. I guess it goes back to what we mentioned just now, but what are the critical things that, once we see that, for sure it's a no-go kind of thing.
You have volume in front of us for sure. I learned that lesson the other day.
Okay, volume
That's a
ahead.
big one for me.
All right. Setiawan?
When you see the trend is dying, I mean, when you check the MA and it's not the trend is not coming back, it's not a pullback.
Okay, so are you talking about the refresh part?
Yeah, that is correct.
Yeah, so it's more so about counter trending, right?
Okay, yeah.
Okay. Ross, what do we do not want to see on our setup?
I was going to say counter trend.
I'll give you a hint. It's about trend. Anyone wanna give it a go?
We need to see the health of the trend. If the trend is not healthy overall, then we need to step aside. For example, if the downtrend we are trying to sell, then we find the overall trend we have got less volume at the top, but more volume at the bottom. That's a alarm. So in that sense, if we want to sell, we probably need to wait until things resolve.
Okay, so more so for volume, right?
Right.
Maybe the trend is not extended too much.
I don't think we really covered a lot about the extent of the trend, because if it refresh again, we can still buy it. So yeah, that's not really something we really went into.
Yeah, and also on the 1 hour, if we see the price is just in the middle of a range,
Yeah.
then we don't want to do that, because we are trading the trend pullback. We need a trend to be able to work.
Yeah. So no trend, no trade.
Yeah.
All right. All right. Volume, counter trend, range. What else?
I noticed on the Swiss yen today that although the flow is up, the move down was stronger, and it was hardly going up, breaking, and then it just went down. And so you should be maybe careful. So the big boy is trend. The health of it is trending, and the push is good enough.
Yeah. So that would probably fall under, let's say, if we have a pullback, we started to push from the trap. If we count this as one push from the release, we can potentially take this. But if it fails to keep going higher and higher without making higher highs, then we have to stop. That kind of situation, I think.
Yeah, now on the Swiss, on the daily, I saw that it went up higher over the, killed this big last guy, and then it went down. And that push up was too weak.
Okay. So, yeah, well, again.
And the push down is stronger. I'm seeing that.
Okay.
Even though the flow is still up.
All right, yeah, I'll have a look at that. that's all, right? That's most of it. Obviously, we do not want to trade something if we do not have space. We generally won't really have space if we're in a range. Yeah. Okay. I guess that covers the entire Unicorn program. All right. So in terms of routine, going back to what we were looking at just now, the first thing we were looking for, I think Maya asked this yesterday as well regarding how I scan through the pairs. I think I covered it again a few days back. What you guys want to start looking for is a few things, right? We can either start from looking for a trap, because ultimately we trade off levels that is trap. Right? So if you think about it, if there is a story involved, the trade is going, the trend is going, but if there's no level for us to bounce off for our trade, that's not going to be a trade to begin with. You can do it like that, or you can go through all the pairs and process what's going on. Like, are we in an uptrend? Are we pulling back? And process everything. This usually takes a longer time for each chart, right? Because if you want to read the story for one pair, in the beginning, it might take 10 minutes. But if you're solely looking for this first, you guys should have enough practice now with looking for release of a trap. Then it's just visual, right? You're just looking for a level to check if it's something for you to look out for. Once you have that, then you process the entire story with the volume, with the trend, all that kind of stuff. All right. So just to do a quick few examples of how I would scan. All right. Let's start from Aussie CAD. Okay. Overall, I see this. So it's a downtrend. Okay. And then what else do I see? I see this trap. Right? I see this trap. Right? So trap here, trap here. Who's gonna win? All of this generally would become the step where we have to process the story. Downtrend, could this be a refresh? If this is a refresh and it's starting to go now, I know price is gonna bounce off this zone because someone down there is trapped, but this trap may not be as strong as this trap because this one is at least following the trend. Okay, so that's my price action analysis. Then I start looking for the details. What's the overall volume to the downside? What's the overall volume to the upside? Do I have volume behind me to do the sell? Or is there too much volume in front of me that I cannot do the sell? All that kind of stuff. Right? So let's just take this example. For instance, this is the last guy. He got killed. We know this is the highest area for price. This is the area where we can expect a good release from. We know this is a trap. They're going to try and bounce. Okay, so volume down here, not so good. Volume here, not so good. No volume here. High volume here. High volume on this last bar. Okay, so not a healthy sell, I would say, based on the volume itself. The only thing that would make us want to sell this even more is when we pull back and have super high volume here. All right. Obviously, we could go get more into this trade, understanding the details and that kind of stuff. But so far, that's what I see. And I'll just mark it purple and put an alarm here on this line.
And purple is going back to it the day after? or the session that's the session after London, let's say New York, when you mark it purple?
Because I'm usually just in front of my desk, so I'm always looking at it. Otherwise, you can just put an alarm here and come back after a few hours just to check.
So the purple is not to check it in 1 day or two. It's more than it's more that that it is. This is not a very good setup, so I'm gonna mark it purple.
I don't understand. No, it's purple because it's not ready yet.
It's not ready. Okay.
Yeah. Because this one might still take a few hours.
Okay.
So that's how I would mark this pair. Aussie yen. Do I see a trap? No. The only thing I do see is we have broken out of this zone here. I can mark an area there, alarm there to sell, but obviously the best area would be a little bit higher here, right? Because I need to consider about space. So by the time this pulls back all the way up there, it may not be for today. So this is up to you. Do you want to put an alarm there so tomorrow you can come back in, or you just mark it, or tomorrow you can rescan everything else? So that's, again, up to you. What I'll usually do is I'll just leave it alone because I will come back to it again, maybe in the New York session or tomorrow. But the whole point is we are in a sell. I want to continue the sell. Where's my trap? My trap is all the way up there. We're not getting there in this session. Okay, Aussie USD. I have this trap. I have this trap, right? So again, similar as Aussie CAD, the battle of these two traps, who's gonna win? The only way to know who's gonna win is to know which trend are we following, right? Are we pulling back to begin the sell again, or yeah, what is it actually trying to do? So the only way to know that is just to go one time frame higher to see what kind of a trend are we in. I don't see any type of trend, right? It may be going up at one point, but it started to just stall. So in this case, although there's some traps involved, but I don't trust any of those traps. So you just skip this pair. Right, same thing, Aussie Swiss. Might be in a downtrend. I see a trap here. I see a trap here. Which one do I lean on? The one that's following the trend. So without going into too much detail of the volume and all that, let me just see what trend are we in. Again, same thing, we're in a range. So I cannot trust either of those zones. And so because of that, I'll just skip this pair. Right, CAD yen, same thing. Range, which we talked about just now, can give us a release. So obviously I want to pull back to sell. That's good. Now, before going too much into detail, I just want to see if I'm again following the trend. On time frame higher, I'm in a range where we have tried multiple times to turn, and how would I know this is the time it's going to turn? Because at one point, someone would think this is going to turn, or this is going to turn, or this is going to turn. So I'm not sure. Okay, so it's a lot about the trends. So again, I'll skip. All right, so the whole thing is just look for traps, and then from the trap, try and identify what kind of trend you're in, and then build your story with the volume and all that kind of stuff around it. Okay, once you get good at this, it will take much faster. Okay, so stuff like this. This is obviously, this does look like an extended pullback, right? Stalls, bam. It should be on kind of situation like that, just based on this all this pullback. Right? Even if you do not want to consider the pullback, still a range could release. So yeah, so again, you get good at identifying levels as you do more practice. Yeah, Laila, does that answer your question regarding how
Yeah, it makes it so much easier. But this was a complicated one for me because I went to the daily to check. I'm seeing all these big swings. And I saw this and I was interested, but thinking that the flow was up, do I take it or do I not take it?
Okay, so this piece here, all you need to know is, all right, now we have to go in a little bit more into the analysis part. Before going into anything else, we need to know, are we counter trending? On the 240, we're not counter trending because obviously we are, way below all these MAs. So let's just check daily, like you said. On the daily, it might just be, if we do sell this, it might just be a counter trend, right? Because buyers in control, very little slowdown, and then we came down really quick.
Yeah, that was something. And then the buyer tried here many times and still didn't make it.
Yeah.
And if you go to the 4 hours, I saw that the buyer tried between two MAs a lot and then it went down anyway. So that made me, okay, even though I'm seeing that it is up, I'm thinking maybe it's time for it to go down now.
Yeah, I think it's a bit too soon to assume because I don't know what this is gonna do. It might stop here and then reject again because it sort of seems like it has made an attempt to go towards recent low, and then if it slows down again, maybe you can give it a go. Short term ago.
Yeah. Okay. Isn't it here when you say maybe it's two-sided?
Yeah. This is two-sided for sure. So yeah, it's two-sided. You want to be really careful. I would not take this trade. Yep. But it is still a level, that's for sure. You can or cannot get away with it.
Just check the volume and all that on the low time frame just to see if you can take some level.
Yeah, here.
First level or something. Yeah.
So you only go to higher time frames when you see stuff like this, right? When you see a range, a break, a very big range, a big break. When you're looking at this pullback, you just want to see if you're counter trending or not. Otherwise, you can take the trade. But if you check the higher time frame and it's a little bit two-sided, then you have to make sure all the analysis here is really, really on point, just so your winning probability can be a little bit higher. All right. So let's say like the other day we were talking about USD yen. All right. USD yen, we have this situation where these might be actual sellers selling from here. If they did sell, they got killed, pull back like that, you will start to think about the buys because there's a trap here for release, but you also need to see where are we coming from, this release. So it's stuff like this where you have to go to the higher time frame to check which direction you want to lean on. Then obviously, you want to lean on a 240 says we want to lean on the sells, and then daily says we want to lean on the buys, right? Because daily was a primary from there. So what you want to do, because we're only trading the 65 anyway, you just want to confirm if you are able to take the sells. That's all. So it's downtrend of 240, pull back, see if you can take the sells from there, but don't take it too far because daily is trying to do their daily primary and then secondary might come in.
Can you consider that all this is secondary then? Still secondary, even though it went down so much?
Yeah, it can or cannot be, but you definitely do not want to sell right now.
No.
Yeah. So
And you don't buy either.
yeah, you don't buy either.
Mm.
Yeah. So you only have stuff to do when you have traps formed. Nothing to do, nothing to do, nothing to do when you have traps formed. Once you have this form, then you check what's going on. Then you look for your cells. Then nothing to do here, nothing to do here. Okay, is this a range that has broken towards the downside, pull back? Can this be a sell? Again, once you have that, just quickly check what story are you in. You know, that kind of situation on the higher time frame. So stuff like this, you know, even if you don't go to the higher time frame, you would start to wonder, why is there high volume at the bottom? And we are right at this high volume piece. So sometimes you end up on the higher time frame telling you not to sell this. Sometimes you won't because on the 60-minute itself is telling you the volume is not safe.
Yeah.
Yeah. Does that answer your question on how I go through the pairs?
Yeah, it does.
Yeah.
I'm not gonna go and analyze every one of them every time. I'm just gonna go look for setup. That's it for the day.
Yep. Just look for traps and then use the trap to form your story. If the story doesn't make sense, then the trap is a risky trap.
Yeah, okay.
Yeah.
Thanks.
No problem. So situations like this, right? We obviously see buyers coming in. If we want to do the sell, we have to make sure price gets clearly below that zone for us to do a retest sell. So all this area here, there's not much to do. You know, all we can do is just mark an alarm there. Once that break, we still have at least 2 hours to wait for a pullback to sell. So it's stuff like this that may get irritating if we're just staring at the charts. So it's better off that we just mark an alarm and then just leave it alone until something breaks.
The problem with this alarm is, okay, it's touching the alarm so many times.
Oh yeah.
That also.
Yeah.
Maybe it's better to put it a little bit away from the
Zone, yeah.
Yeah. Then you know, okay, it has broken. Then.
Okay. All right, let's take 5 and then we'll come back with more questions. All right, let me know when everyone's back.
Yeah, I'm back.
All right. Okay. All right. So some of you guys were wondering about my routine. It's not anything that I don't know how to put it, but basically it's not that complicated. What I usually do in the morning, well, not morning, but before I start trading, right, is I'll check some of my trades and see what a good trade looks like. Okay, so before starting trading, you guys can do whatever you want to make sure you're in the zone. So for me, usually I work out in the morning. I'll meditate a little bit. I'll journal a little bit, that kind of stuff. But that's all up to you. Whatever you guys do that makes you feel like you're in the zone. And for the trading part, it's important because I think it's better to not share my screen so you guys don't look at the blank chart. So most of you guys have exercised before, right? You have worked out or in some way or sorts before. And usually when we do any kind of exercise or workout, the most important thing before doing any of those kind of stuff is stretching, right? Stretching and warming up. So I see trading the same way as because it is a performance sport. It's just that we are trying to perform with the mental side of stuff. So we also need to have some kind of a warm up. So the way I usually like to do it is I will check some of my trades, the ideal scenario type of trades that I've taken before and that works out really good. I'll check what it looks like. All right, I'll check one or two trades just to see the overall steps I took before taking stuff like that. And then I'll recheck what my trading strategy is, which is the one that we just talked about just now. So I'll check those two things, and then the third thing I'll usually check is what are the top mistakes I usually do. So let's take an example. I don't know. For the last 10 trades, 4 trades I've been taking trades where volume is ahead of me. So I'll check the top few mistakes that I usually do, and all that becomes my pre-market warm-up routine. All right. So post-market, I usually do the same thing. If I don't have a trade, I'll still try and journal how I did for the day. So if I don't have a trade, is it because I'm following the plan and I don't have any setup? If that's the case, you have done a really good job following the plan, because the plan is you only take a trade when there's a setup, right? The same thing goes for losing trade, winning trade. If it's a winning trade, but you're not following the plan, then you have to stop and think why you're not following the plan. So all that kind of journaling work after the trading day ends is really important. No one's gonna check those kind of stuff. It's all for your personal self. It's all for myself. So it's really important to know why you're making certain mistakes. Why are you bending the rules too much? So take an example for me. In the prop, sometimes I feel pressured to perform, and then I'll see myself taking bad trades, and I don't see them until the fourth losing trade, let's say. And if I don't do my daily journal frequently, like every day after my trading day ends, then sometimes waiting until the fourth losing trade is a little bit too much, right? Like I've wasted 3 extra losing trades just to find out that, oh, okay, I'm taking bad trades because I'm under stress to try to perform, that kind of stuff. The main point is, try and list down what you have done throughout the day. Have you followed the plan? Why you broke the plan? And all those kind of stuff. So that's my cool down routine, if you guys want to call it that way. In terms of post analysis, again, it's not anything too at once. All you want to do is just look back at the checklists we have made just now and see, from the trade you have taken, does it fit all of those stuff? If it doesn't fit, it doesn't mean it's wrong. It could lead to something else. It could be saying you have discovered something new, something you want to keep trying in the future, or if you're not really following the plan, then why are you not following the plan? So all that kind of stuff you guys want to do in your post analysis. Doesn't necessarily have to be in a video format. Just make sure you're doing it for yourself to improve, not to put it on a video just to share it out. That's really important. What else? Yeah, in my post analysis, I'll just check if I'm following the plan or not. So at the end of the trading week, I'll look through all my trades. Once more, I'll spend 2 to 3 hours on the Saturday just to see if of all the trades I've taken, let's say 3 trades, how many trades are following the plan, how many trades are not following the plan. What I have noticed this week, that maybe if I bend the rules here and there, I can still get away with it. So all those kind of stuff, it's all personal work, right? You can try and experiment with yourself, those type of stuff. Yeah, any questions? It's nothing too advanced. It's just a warm-up routine and the cool-down routine where I find it's really important because you want to stop. Let's say if you are intraday trading, you want to stop at the end of the day and then start the day fresh. So the cool-down and the warm-up routine I think is crucial.
Thank you.
In what kind of form you keep your journal? Is it in a Word document? Do you do like screenshots so that you can record the setup when you enter the trade, or you just do that on a spreadsheet?
I have a spreadsheet as well. I have a spreadsheet as well, and then I have another app. It's called Evernote. I think you guys have heard of it.
Evernote.
Yeah.
Okay.
Otherwise, anything could work. You can use words. The other app basically what it does is just a journaling platform. So I'll just put my screenshots there and then put a few notes below. That's all.
I see. Okay.
So words, or anything.
Yeah. Sure.
So yeah, that's about it. So we have a few criteria, right, in our trading strategy. You can test out all of those criteria yourself. So let's say you guys begin trading after the unicorn program, and you guys are saying, I'm not sure what Lucas say is true about having to take out the guy who started. I'm not sure. Let me try and test it out myself. Then you can try and do that on your spreadsheet, taking trades or examples of trades where the guy who started is not taken out, but you still get in with volume behind you. And then from there, from the spreadsheet, then you can see what the winning percentage is like. So that's what I use the spreadsheet for, just to see what if I change the criteria here, what if I change the criteria there, what difference does it make? Otherwise, the spreadsheet is just to record risk reward, the basic stuff generally.
You still back test and stuff like that?
For now, no. I think every year I'll do, if Naveen teaches something new to me, I'll do it for like 3, 4, 5 months. Yeah.
Nice.
Yeah. But the other thing is also because we are trading on the 65, no need to put too much emphasis on back testing, because I've done that a lot before, and I often find that back testing's result is 4, 5, 6 times better than the actual result. So it's a little bit more important to just focus on forward testing, because there's a lot of psychology involved, all that kind of stuff. Hindsight bias, those stuff. So if you're trading on the 65, it's okay not to backtest too much, because it's not like we're getting, I don't know, one trade every 2 weeks kind of thing. Sometimes you get 2 or 3 trades. So that's okay enough data where you can use to forward test.
Yeah, I back test the concepts you guys teach a lot, but I found it really hard to actually place, like, find entries and stuff through back testing. It's just difficult.
Yeah. Especially on the 65, we cannot really go too far back on trading view. So it's not something I've done before, but you can try maybe on higher time frame, say the daily 60 kind of thing, instead of 65. So you can try doing it like that too. Then that would work. Yeah. But again, I haven't done that before, so I cannot give you a very good answer on that, because if you're back testing on the daily and 5, maybe the volume is going to be hard to look for, because the daily's volume is always the same kind of thing. So yeah, you can play around with it just to see the overall price action, that kind of stuff, I guess. Yeah, any other questions regarding my routine?
Yes, at the beginning, as we are at the beginning now, or at the end of the UMP, we should start on demo or a small real account. How long on a demo? If only demo?
You can try demo, but don't trade on demo too long. I think it all depends on you, because some people, when they are trading on demo, it's easier to manage, easier to hold trades, all that kind of stuff. So I don't know, demo for 10, 15 trades, and then starting with small size on live. it all depends on you how seriously you can take a demo trade.
It's about the psychology, because when trading on a real account, it's money, it's sentiment, it's emotions.
Yeah.
But now, let's say I am in a trade now in Euro Japanese yen, and when I see some candles against me, wow, what happens? The heart is beating.
Yeah.
Okay. I have another question. If we are in a trend, we should monitorize the trade on the 5 or on the 60?
On the 5.
To see the health of the trend.
Yeah.
On the 5. Yeah. Okay. Thank you.
The 5. Yeah. So pretty simple, right? My routine is not rocket science. It's just a lot of tedious work, I suppose. And always ask yourself why you're making certain decisions or why you're feeling certain ways. So say, let's say for example, Eon, you're in a trade, and then if you see that every time price moves against you, you're feeling anxious, that kind of stuff, then you gotta ask why are you feeling that way? Is it because you're trying to, this is just purely example, if you're trying to perform really quickly, or you're under any stress or you're under any pressure to perform, it's stuff like that that helps me. Obviously, everyone could be wired differently, but yeah, that's what I usually do. Okay. Yep, no questions. Yeah, Ross.
It's not really related to your routine, but I've been using MetaTrader and set up chart profiles, etc. And then I see trading views much better. And I suppose what level do I need? There's various levels of program you can subscribe to. What sort of level is needed?
What do you mean by level?
Well, if you can pay various amounts per month for access, and what level for what we're doing at the moment. What level of subscription do I need to get into?
Okay. I'm not sure about the exact plan, but I think the most advanced plan, it gives you the option of multiple screens. Multiple charts, which is,
right, yeah.
I guess, which is fairly important. But I think you can do it on MT4 as well, right? You can.
Yeah, I got that.
Yeah. So I think if you're used to MT4, then it doesn't really matter that much.
Right, I might persist it for a while, then look, reassess.
Yeah. Yeah, Eric.
I was going to ask, for this strategy we just learned, if we would like to use it on a higher time frame, would it be any different? Would be anything else that we need to consider?
Generally, no, because so stuff like let's say this pair. Let's say, okay, not this one. Let's say this one, CAD yen. On a higher time frame, we do have the same situation, right? Well, this is like a weekly refresh situation.
Right. Yeah.
And then primary, secondary. It's just that now you're waiting for this piece, which may take a little bit longer, but it's all the same thing.
Yeah. But the missing part would be the volume, because on the higher time frame, it's a lot harder to read volume than 1 hour, 5 minutes.
Yeah, it's not so distinct, right? So sometimes you get very clear distinction between the volumes, like this one here, which is right around these areas.
Yeah.
Other times it may get a little bit tricky. So,
Yeah.
If you fail to do if this one, you might see that pullback. This is a zone where it was a refresh zone kind of thing. So people were trapped here. And you can also do the buy. But again, volume doesn't really tell you that much.
No. Yeah.
But the overall concept is the same.
Yeah. Yeah, because I was trying to at one point, because I have a full-time job. At one point I was trying to trade higher time frame. I found this really hard.
Yeah.
So I was thinking, is there a different trick to trade time frame, or we should use a different strategy?
Not that I know of.
Right.
Yeah, because when I see Naveen trading on a higher time frame, he still looks at the same kind of story.
Right.
Yeah.
Yeah. Okay. Interesting.
Yeah. You just have to be a lot more patient.
Right.
Yeah.
Right.
So on a higher time frame, we can see only the story, the traps, but not the volume. So the health, let's say.
Yeah, something like that. Yeah, because the volume is not so much distinct. It's more.
Yeah, the volume is hard. Yeah.
Yeah.
Okay. Let's see here. My alarm triggered. What is that?
All right. Okay. Is there any other kind of question you guys have?
Yes, I have a question. Okay, we have 1 week in EMP. What happens with the access to Elite, to this section?
I think you guys will still have access to the unicorn section. For I'm not sure, for at least 1 to 2 weeks, I think. That part I have to check with Naveen because I'm not sure myself.
Yeah, because in the last webinar on ITP, Naveen showed that the first UMP students have also access, and they are together and trade.
Yeah, that's right. That's right. Yep.
So I asked about us. I don't know.
Yeah.
It depends maybe of the group, or I don't know, other conditions.
No, I think should be okay. Again, not really in my control, but should be okay, I think.
Okay, thank you. So 1-2 weeks after the end of UMP.
No, I'm saying I'm not too sure.
Okay. Okay.
Yeah.
We'll see. Maybe an email or ask to info.
Should be okay. All right.
Okay, thank you.
Yeah, no problem. Okay, if you guys don't have any question, we can look at some charts or at least some PAs.
I have Euro GPI buy counter trend.
For today?
Yes.
All right.
Euro, British pound.
Okay, so what are you looking for, Eon?
I looked on the 4-hour first, and I could see a big range down, which could be seen also from daily.
Okay.
Yeah, and I expect it to be a rejection from this range up. Looking on 1 hour, okay.
So where exactly is your 1 hour?
If we extend the range, the trap. Okay, looking on the 4 hour, or looking on 1 hour, let's zoom in. I could see some volumes up. I analyzed this trend. I analyzed this trend. Okay, okay. I analyzed this trend, and I could see that I have volume here, here, some volumes here, and then the volume died down. Then we have a high volume here. So we are in a congestion area on 4 hour, and we have a high volume down here. And I suppose, okay, it will go up for a counter trend until here or here. Yeah, if I look on the 5 minutes.
Okay, before going down to the 5,
on the one.
Before going down to the 5, so I assume that you're looking at this right here. These guys.
Yeah.
Yes, it is the last guy. Let's see if I marked it.
Yeah.
Yes, I marked it on my chart. These are the last sellers trapped. And in this zone, I expect it to be a bounce.
Okay. What about the volume overall trend? So you were saying you have volume here, you have volume here, high volume there.
Yes.
This
and
one
here
is,
a high volume up.
So this one is high, but because this is pure counter trend, there's no story involved, right? If there's no story involved, it becomes a bit tricky. I guess you can take it from here to here.
Yes, looking on the 5 minutes, I saw that I could have a high volume here, and I expected it to be taken on the 5 minutes. Okay, so analyzing this last trend on the 5 minutes, I see here no volume, and then a high volume down here. Yeah, and the high volume came with this guy who started it. Okay, when analyzing this, I was something about here, and I expected it to be taken, this guy who started it to be taken, and then took the trade from here. And with the stop loss like this, and take profit on the 1 hour at the first problem area.
Which is where?
Here. Here.
Okay. Yep. Yeah, it was
it seems to go.
Yeah, I'm seeing that it's going.
Now I have volume here.
Yep.
Good volume of the market open.
Yep.
Which it goes with conviction now.
Yeah. So you want to take some action around here?
Okay. I wanted to ask about the trade management. If we can talk about. Yeah. We have. So we see here a problem. Yeah.
Yeah.
I should take some money, but how much?
What do you think?
If I, in percent, how much take profit I'll take here?
Yeah. What do you think?
Because I want to go up. Should I take 50% and move the stop loss? I know here, or it's about the trade management. Where should I extract some money, and where should I add another money again if, let's say, this is overtaken, this zone is overtaken?
Yeah.
and
So
the
what?
pullback will come.
Yeah. So what do you think? How much do you think you should extract around areas like this?
What I think, 50% to move the stop loss to break even. I know
Okay.
it's not so much, but why do you say it's a problem there?
Because it's very much counter trend and there's no story involved. So if I go to
You put this level because of the volume. Okay.
So because of the higher time frame on the daily, there's no story involved, right? Because right now what you're doing is trying to trade a reaction of this zone here, this huge range here. So if generally speaking, if there's no reaction, there's no story involved, and you're purely counter trending, you want to get out quick because you're not sure what might happen. It's stuff like dollar Swiss in a counter trend. Right, so this is like a counter trend trade. If let's say we are doing the buys here, you want to get out quick because in a counter trend, this move will get every retail, not just retail, everyone to think about the sells. So any pullbacks, they will try. They will try. This usually happens in counter trend trades. So yeah, you want to get out quick.
Okay.
On euro yen. Yep.
Okay. Now or later?
You're really anxious, right? Because right now it's going hard.
Yes.
Yeah. So you want to get out at least 60%, I would say.
Okay. This trade management, we should do it in a okay, everybody should have his trade management, or we should follow some rules. Let's say we get here at a level and we should extract at least 50% and move the stop loss to break even or a little bit above.
Yeah, there's no system or rules behind it. All I can say is if you're expecting this downtrend to end, they have ended and we are now in an uptrend. All right.
Okay,
So,
the trend is healthy.
right. Yep. So we are in an uptrend. So the only time when this trade fails is when the uptrend fails. Then your buy idea is wrong. So just based on the trend alone, right? You can move your stops here, or yeah, let's see. Then you see what happens here. You know, this is just purely based on the logic of how a trend should go.
Yes. Anyway, we see now a high volume here at this zone. So it should be a concern or not. On the, yeah, we are on 5.
Yep. So you have volume here, right? But you also have high volume here.
Yes.
So how's the strength of this uptrend?
It's healthy. It's good.
Yep, it's healthy. It's good. So the volume here, just based on volume alone, is not a concern for you.
But if it ranges here for some time too long, it would be a concern. I should take out. I should go out.
Yep.
But a little small, because we break this long range, let's say, and sellers will come. But maybe they will come until here and go again.
Yep, it might happen.
Okay. I'm.
Do you understand why I'm not sure if this might happen? Because we are overall in a downtrend, so I'm not sure if this is gonna happen or this is gonna happen. So
Okay, I'll see the volume here.
Yeah. You see the volume.
If the volume, high volume comes here, something like this, I'll exit. It's good. Well, there are some scenarios I should compute ahead.
Yeah, you want to take out more money here just because you're in a counter trend and there's high volume here, right? So the reason why it gets confusing and is because you're not sure where your target is. You're not sure where this thing could go. Unlike a downtrend, you see, if we are here, let's say we do take a sell, we're pretty sure where our target might be, right? If this guy got killed here, okay, maybe this is not the best drawing. Like that. Let's say if we are doing a sell, you know pretty clear your target is here because they want to buy. So when this thing resolve down, pull back, when you sell here, you know pretty sure that your target is here. But right now, you're here, trying to do a buy. So you're not too sure where this thing could end up in a downtrend, doing this counter trend. So the most logical area for you to just get out is just look for a wall, right?
Okay.
Yeah. So that's what usually happens when we are counter trending. So Eon, what you did right was identifying a very good release zone. Okay, 5-minute volumes is also very well done. But you want to get out as quickly as you can in counter trend situations like this.
The first area of problem. Okay.
Yeah. Yeah, nice.
Okay, thank you.
No problem. Okay. Team B, are you guys looking at any... Laila, you were talking about Swiss yen, right?
Yeah.
Okay, so just now you were saying this push that came down, was it?
Yes.
Oh yeah, then we talked about this being perhaps a two-sided market because the daily might still try and think of the buys. Yep.
Yeah.
Yeah. So stuff like this where it's in a two-sided market, and if it's in a two-sided market and you potentially see a setup, the slightest warning sign would make you think not to take the trade. So the slightest warning sign would probably be the fact that there's a little bit of volume here at the bottom of this trend. So because it's already so risky, right? In the two-sided market, you have to make sure everything else on the 60 follows, it has a good story behind it. If it doesn't really have all the elements, then you want to think twice, 3 times, 4 times about taking the sell.
You should check if you just go to the 1 hour, you should check the volume from where the pullback is coming and not come up so much at once as it's doing right now. So now it is at the target area, but you wouldn't take the sell because the way it came up. So the pullback should be like, okay, gradually up and the volume is on the right place, and then go to the 5 and the volume is still on the right place, then you can take it, or you don't do it.
Yeah.
You just monitor it all the way, I guess.
Yeah. So I think it's more so about the volume, because sometimes even though it's strong, in some cases, if it rejects hard, then maybe on the 5 you can still find an entry. So it's more so of the volume to be extra sure,
So let's say if it comes this hard, and even if it is with volume, then you see the rejection with the big volume, then you know, okay, the sellers still want it.
Yeah. Yeah. If it rejects and has higher volume than before, then
Yeah.
maybe the sales may still want it. Yep.
Yeah. Okay. Depending on what the buyers do after the primary, let's say.
Yeah.
Yeah. Okay.
Okay. Yep. Any other traits you guys are looking at, or have any question, post analysis, that kind of stuff?
Earlier on, I took a sell on Euro USD. I just got stopped though.
Euro USD.
Yeah, I was looking at Euro USD also.
Okay.
Yeah. I'm also looking at this pair, but I think at this moment it's hard to sell. I'm still waiting.
Yeah, mine sure was a little aggressive, so I'm not too mad that I got stopped.
Mm-hmm.
So it was my fault.
So it's stuff,
You're trying to sell, right?
Yeah.
stuff like this. Okay. Yep, we understand that it's in a, so at least from this few swings, we're in a downtrend. And this obviously has some buyers involved because it does feel like it has slowed down enough, inviting buyers to come in.
Yeah.
You got trap and volume behind.
Yeah.
Let me just quickly check where we are on a higher time frame. I think we spoke about this, where this range, when it got resolved, everyone thinks it's a buy, crash down instead, pull back to release, right? We were hoping for a higher price, but it just stopped there. So now it's coming down. And I was also saying inside this zone, there might not be any kind of people who are still trying to release. So, okay, I guess we can think about the sell. Let's drop down to the 5. All right. So how do you get in on this one, Jay?
So I got in right at the sell. I seen that like a refresh was coming in. Some buyers stepped in, and then the sellers took them out and transferred the high volume from the top. And when London opened, they just started to push up. So I think there could still be a sell if it sets up, if the volume transfers over.
So yeah, this one here has volume on this bar, right? Came right into the zone, this zone here with volume. Like you said, buyers did an extensive pullback, refresh, and then it's supposed to go from there. And then you see high volume. You see high volume here. It went up, came all the way back down, and crossing that zone here. So this is more so of like dollar yen, right? Okay, the difference here is here we didn't really take out the guy who started. All right, guy who started is not taken out, but you have volume behind us, right? So the other day when USD yen, some of you guys were trading it. Where is it again? Here. This one, it also has similar elements. Well, not similar, but this one, pull back into a release here. Let's draw this here, higher time frame release. This situation is a little bit different because the guy who started is here. He was taken out, but you have volume ahead and volume behind. So this is not a clear setup because of the volume ahead. Taking the cells around here is not clear yet, right? Euro USD has similar situation where you have volume behind you. You see this pullback, buyers died when it crashed down, but the guy who started is still intact. So it's stuff like this where you want to keep track of, where when the setup is not 100% ready, but you have a very good gut feel about the volume when you try it out. Let's see how many times it usually works out.
Yeah, I realized it was aggressive, so I'm not too disappointed that it stopped me out.
Yeah. Yeah. I have to say the other thing that might be an influence for this particular trade is you see how Euro USD, yes, we have this little zone here where price can release to push down. The story on dollar yen is a lot more different because here we have a huge ton of buyers, and this is sort of like the on phase situation. But Euro USD, the situation is a little bit different. We cannot really say that there is a huge ton of buyers here as compared to dollar yen. For sure, there's buyers there, but just based on price action, the dollar yen looks a lot more. Looks like this, right? To go down. Here, the situation is we have sort of refresh. We came down. It's sort of like a news story in play kind of thing. So it's slight little small elements there you just want to take note of when you're doing your post analysis. But in terms of the execution, I think it's not that bad because you do have volume behind you. It's just this guy is not really taken up.
Could it be that when when the buyer tried to go up and the seller came down to where the buyer started, then you could see what the buyer would do here as last attempt? If it fails to there, and then and see here what the buyer is doing, if this buyer is still around or not, and make his try. And if he doesn't make it up, then you can see the volume when he doesn't make it up, and the volume is increasing and coming down. Then maybe you can try. Now you see that the reaction from the buyer is strong, so you don't do anything.
Yeah. Now you don't do anything. But when Jay was getting in around here or here, I suppose, he did have volume behind him, technically speaking. So it is a entry just based on volume alone. But usually, like the way I say it, 5 minute, if the trade doesn't work out, it's not so much about what happened on the 5 minute, because we have seen stuff like this where the guy who started is not taken out, but volume behind is so high that it could still punch down.
Even though it doesn't stay up for a while and then crash, now it didn't stay up for a good period of time. It just crashed down. So it was too sudden. I'm thinking when it's like this sudden, you don't see a lot of tries from the buyer, and it comes down so sudden. Maybe this is where the buyer will try again.
No, I think these are all decent enough slow down tries. Yeah. These are all tries, and just based on price action alone, these are all steady pullback for buyers to come in. Multiple tries, immediate crash. So just based on this alone, the sell should go down.
Yeah. After this time with all these pushes up trying.
Yeah. So I would say there are a few things that could mess with this trade. Either the setup is not 100%, we still do not have all the criteria, which sometimes is fine. But for the most part, I think it has more to do with the 60 minutes. So on the 60 minute, there are a few things that could be a problem. You might say this breach is not strong, or it could still be in a range situation, that kind of stuff.
Couldn't you just say it didn't come up to the release level, really?
Which one?
Just a minute. I'm thinking that the buyer didn't come up to here. It just stayed here. Is it enough? The level?
But here...
Or do you think, this range is enough? Because it ranged, maybe it's gonna release down, yeah?
Yeah, that's probably what they're thinking, because this slow down and then sort of reach higher high, hold above here, we will have enough buyers to be trapped. So, yeah. So these are the stuff you guys want to train your eyes for, because the story looks the same, but somewhere along the lines, the setup might not be exactly the same. Does that make sense for this one, Jay?
Yeah, one thing that I was concerned about, but I still felt like this still had potential. If you just zoom out a little bit, it was this piece.
Yeah.
But I like the volume for the sell. It looked good.
Yeah, that might be a problem as well. Yeah. So it's all about training your eyes to see the same kind of situation, but that the other one works a little bit better, where you can get away with more looser way of reading it on the 5, if that makes sense. So like here. Yeah, but I think you guys get the idea. Yeah, Eric?
Yes, I was thinking about do we, because this is more kind of like a price action 1.0 stuff. We were like in the gauging momentum. We were looking, if I was looking at this, right? So it's come down like this, and then the strong pushback. So yeah, for this kind of scenario, I'm not quite sure. When I was looking at this, I didn't pay attention to this anymore, because I was more focusing on the zone here, the volume here, and then all that kind of stuff, low volume here. So do we still pay attention to this kind of movement? Because sometimes this can be an illusion. I remember I had this kind of thing before. It looks like a really strong push up, but eventually it will go down. So yeah, I don't know. When we use the strategy we just learned, do we still take this into consideration? Like just now you said, well, we can see this strong push down, and then it's getting weaker and all that kind of stuff.
Okay, so that's important, right? Now here's the logic of why strong pushes in the MPA 1, where we have to be afraid of. It's all because, let's say if we are trading a pullback, right? If we're trading a pullback, it's all just because like stuff like that. Let's just say if I have a slowdown, and let's say I sell, it's quote unquote unsafe because the guy who started is just alive. That's all. So this is like your strong push up. So that's why we always say when we have a strong push up, try not to take the trade. It's only when you see a slowdown and then you do the sell from there. The whole idea is just to make sure that the trend change. That's all.
Okay.
That's where it comes into handy. So in this case, all we are doing is we are just going down to the 5 just to see that push up. So why Naveen say that's important is because this buyer, technically speaking, it hasn't really stopped. I can argue that this is the last guy who started, but if someone were to come and tell me that this is the guy who started, he's not wrong as well, right? Because you can say the main guy is actually here. So situations like this is where we use another tool, which is the volume blend. So yeah, like you said, sometimes it's an illusion. It's not necessarily true all the time.
Sure.
Yeah, it's all just based on what context you're in. That's all.
Yeah, thank you. In this case, I was kind of like scared to get in this trade because this guy and this range, they are just too close. I was thinking, I was actually waiting for this thing to come down, then take it from there. Yeah.
Yeah, that works. That works as well.
Yeah.
So yeah, on top of my head, I can't really find something. So like this one here, let's say we know this is a 240 primary. Although it's hard and strong, it can still be sold, you know, from that area, as long as it's a release, and 5 million volumes telling you it's okay, and you see a slowdown at a good area, then it's fine. You know, like the Euro Yen Eon was on. It's hard and strong, but it can still turn. So it all depends on the release zone, volume, all that kind of stuff. All right. Any other pairs you guys took? Casey, yep.
No, I wasn't. I was looking at the same pair as everybody else. I was going to ask, kind of along the lines of the primary, secondary, and the on phase, kind of that we've been learning. And I kind of asked this a while back. Would it be best, just because to me, like what the unicorn program is teaching is finding those traps in that on phase, and then once we master that, then we can try to mess a little bit more with the primary bounces and the secondaries. Is that kind of how we should look at it? Or for me, that seems like where I want to focus most on those on phases.
Yeah, it's fine.
Like that primary you just drew out on this one, like that.
Yeah. So like this one here, you can take that trade. You can take the sell from this. It's fine. Because it is still a trap. Yeah. All you're thinking of around this point here is just assuming that the 240 might give a reaction, and that reaction might be the primary. That's the story part. But in terms of the trading part, you just look at this area here and then try and think of the sell, get in on the sell there. So
gotcha. Just find out where you can get it on the sell on the 5. Somewhere.
Yeah.
Okay. You realize it's a trap, and then it's perfectly fine to go down to the 5 and try to get it entry. Okay.
Yeah. As long as you are able to see that you're following some kind of a trend, some kind of a story. So,
okay.
Yeah. So that's if we take it a step further, if we go back just to look at the daily, that this is a pullback coming in, you can still think about the primary to do the buy here. It's just that because it's such a huge extended move down from the top like that it's impossible to gauge the 5 minutes, right? So because it's impossible to gauge the 5 minutes, then we all just have to wait for, yeah, either this guy to be killed or range to form at the bottom where you're thinking that the daily primary can come in and then take your 5-minute pullback buy here situation.
Okay, that makes sense.
Yeah. So this buy isn't necessarily the on phase, right? It's sort of like a counter trend trade, but you're on the daily is telling you that it might just be a daily coming in with a primary, that kind of stuff.
Yeah, okay.
Yeah. So the whole thing is look for this, and this, right? Check the volume, and then check if you're following some kind of a story. The story part is the primary, secondary, or launch phase. That's
yeah, this logic or this story would be okay. This is more than likely the primary, and it's giving me an area that I could try to jump in. Okay.
Yeah. So
Yeah, thank you.
Yeah, no problem. All right. So one last piece to sum it all up is we're all just looking for this, the type A, B, C kind of stuff. We're all just trying to trade a release. This is on our, let's say this is on our 60. We're all just looking for this setup, this pattern, if you want to call it. And then obviously with volume and all that kind of stuff for this trap and release. And then the only time we don't trade this is if there's not much of a story involved. No story. That would be the primary, secondary, or launch. So if this is in the primary, then it's fine, or launch phase, then it's fine. Or we don't take that trade here if it's counter trending. Besides that, it should fall under the trend. It should fall under some type of a refresh. Otherwise, it would probably be a counter trend, or it's just a random SNR. Yeah.
Yeah, that makes sense.
Okay. Yeah. Williams.
Hey, I'm sorry. Can you quickly run through the primary and secondary stuff? A little bit confused on that.
Oh, no problem.
I remember.
Okay. So let's do this here. We have an uptrend, right? Uptrend. Let's say we get a kill. Guy who sort of got killed. Pull back. We're thinking of a release to sell.
Yes.
Right. So let's say this is 60. Okay. Let's say this is 60. And then let's say one time frame higher, 240. This would look like, let's say if you go on to one time frame higher, it looks like this, and then this, like that. Okay. So a primary, secondary, and launch, all that kind of stuff just mean that the 240 has refreshed, and refresh means inviting sellers. In this case, inviting sellers because it's in an uptrend. So inviting sellers, those sellers might be anyone who's thinking that it's a release from here to sell. So let's say here we were selling, and then 240, because it's in an uptrend, it continues to go up. Right? So on this 60, the usual type of situation we will see is goes up, come down, goes up, kill, all right, pulls back to release, fails to go lower low, turns around.
Like a refresh.
Yeah, that's a refresh. So yeah, this is exactly what a refresh is. So in this case, we just label this push down as primary, this as secondary. Secondary is generally when it fails to make lower lows. Sometimes it spikes the primary, but the whole point is it fails to make lower low and then resume the overall uptrend.
Okay. All right. Thank you.
So in this phase, you see two traps, right? The first trap is this piece. Let's say this is a kill, right? So that's one trap. This is the guy who started. That's one trap to go down. Okay. You also see another trap. Let's say this piece is here. Let's say it comes down. Let's say it makes one more swing down. All right, just for the sake of example, goes up, pulls back. This pullback here is this one. So there's two traps inside this structure. So in case like this, we just want to lean on which one is following the trend. This one or this one. So it's this piece that's following the following the trend that has a trap. Yeah, so we are sort of just looking for traps and releases, but making sure that we're not counter trending. And primary, secondary is just when the higher time frame, for example, has invited enough opposite party, which at one point, we might think it's a sell, but the higher time frame thinks it's a buy for them to resume here. Sort of like a money spot, that's all. Does that make sense, Williams?
Yeah, thank you.
Yeah. Yeah. And we always say stuff like primary cannot go, this primary part cannot go all the way up because these guys are trapped, right? They still think it's a sell. They might want to release, or sellers might be coming in. So this piece, it's hard for them to just punch through like that. That's something else we usually talk about.
Okay. Yeah, I get the concept. Thank you.
Yep, no problem. Yep. What I'll do is I'll try and get Naveen to come in on Monday and try to have him explain some of this stuff. Because just to see, having someone else like Naveen explaining it would get the information more tattooed, in our brain. So he'll come in. I think he'll come in on Monday just to test you guys with everything you guys have learned so far. All right. Yeah, I think that sums up most of the strategy. Going forward next week, we're gonna keep doing more trades practice, and if you guys have any questions at all, ask away next week regarding anything about trading. All right.
Thank you.
No problem. Yep, Ion.
Yeah, I'm just curious. Will we add more layers on what we learned?
More layers?
Yes, more new knowledge.
No.
Next week.
No.
Okay. And another question: can we trade from a phone with this strategy?
Well, you have to be able to analyze everything on your phone then. Yeah. So it's a very open-ended question. If you're able to analyze it on your phone, then I guess it's fine. Yeah.
Just analyze on FXCM on TradingView and enter on our broker.
Yeah, that's what I do.
But the phone, you say it's too small to see every detail, or not?
For me, it's too small.
Okay. So it's better from a PC.
Yeah, I think so.
And we do not use correlation, no, for
Yeah.
trading.
We do. We were using it the past week, right? The 4 charts.
The 4 chart with yes, Japanese group. Okay.
Yep.
Thank you.
All right. Right. Any further questions before we wrap up the week?
Yeah. Lucas, just one more question on the correlation. So, yeah, I'm not quite sure. So for the correlation, when we do the entry, do we look at correlation, or correlation is more sort of to help us to decide the overall story? Or, yeah, I'm not quite sure how intensively we need to go into that area. Because sometimes when you look at multiple charts, I'm not. Yeah, I don't know. It could be like information overloaded. There's so many things moving.
Yeah. So it depends. Let's say, let's do an example then. Let's say yens. All right, yen, and let's say cat yen.
Yeah.
Okay. So let's just assume that we want to sell. All you're doing on your correlation is just to, okay, let's say we're focusing on dollar yen, and let's just say we want to sell this zone here, right?
Yeah.
You want to sort of do the exact same analysis for your strategy on, obviously, if dollar yen is the one that you pick, you have all the criteria checked, right? So you want to do the exact same thing on other yen pairs. So if they don't have the same situation, don't have the same story, the only thing you can do is just to mark out levels, SNRs, all that kind of basic stuff, just to see where price can slow down. So let's say this is here, right? Just for the sake of example, and let's just say this one, the level is here. Okay, and then on the 5, you're just pretty much doing the same thing. Analysis on the 5 is just waiting for the kill to happen and volume behind you, right? So on the 5, you are marking where the highest volume is and where your Kairos started is. So you do the same thing on all the rest of the pairs.
Okay.
All right. So where it comes into handy is if dollar yen has a kill and has the volume behind you, but all the other pairs are still very high up and they don't have a kill yet, then that might be a warning sign for your USD yen. So you check 2 things. Could it be a USD thing? Yeah. So if it's a USD thing, then you do your analysis again on the USD pairs.
Right.
So if it's not the USD pairs, then you have to double check what's going on with the dollar yen, because it just might be a standalone pair, which is still fine. But you just have to make sure the analysis on dollar yen is on point. It's just like you said, it's more so for double checking everything.
Yeah, I see.
Yeah.
I see. Yeah, okay. Yeah, I think this morning is also because I was monitoring Euro USD and USD Japanese yen, I believe, at the same time, and I was seeing totally different reactions in those the 2 different prices. Yeah. Okay. Yeah, I see. Thank you.
Yeah.
Can we use this for exits too?
Yeah, you
or
can.
Just entries?
You can use it for exits as well. Yeah, that's as far as I'll go for correlation. Like you guys know from the course, we go into a lot of different stuff, like the strength numbers, timing, the pattern entries, that kind of stuff.
Yeah, yeah.
So those all are useful. It all just depends on how far you want to take a tool to, if that makes sense. So we talked about supply, demand, all that kind of stuff. It's all useful. It's just how many more tools you want to add to your strategy. Those are like personal preference thing.
Do you base your trade off on FX meter too?
I'll check what the flow is going on, but most of my analysis, I'll also be looking at the 60, the 240 daily anyway. So it's just there for me to, just to see the overall flow.
Oh, okay.
Yeah, obviously, you guys can use 6 charts as well for correlation. That's fine. But yeah, sometimes, like Eric, you were saying, you will have information overload if there's too many pairs. So it all comes down to how extreme you want to be.
Yeah, that's what I found with the Unicorn program. It's kind of helped me narrow things down because I just had so much, had all 7 pairs on correlation, trying to figure stuff out, and just so this has helped me just kind of narrow it down and be able to focus instead of getting lost in the madness of all the pairs and how crazy it can be.
Yeah. In the beginning, you guys were saying, we have learned so many things from the course, but not too sure how to put things in place. You guys should have a better idea of where to start and what to look for. At least, based on the strategy, the first 45 minutes when we were talking about the strategy kind of stuff.
Yep.
Definitely.
Yeah. All right. I think we'll call it a day here. I'll try and get Naveen to come in on Monday, if he's available. And have a great weekend.
Have a nice weekend. Bye.
Yeah.
All right, thank you.
All right.
Thank you. Bye. Bye.
See you guys.
Mm.
Bye-bye.
Bye.